Thank you for joining us again. Let's head straight to the equities market. In the first 6 months of this year, investors have gained 5.3 trillion naira, propelled by macroeconomic reforms of the new administration. The NGX All-Share Index, an indicator which is used to measure the performance of listed firms on NGX, hit a 15-year high for the first time since 2008 and crossed 60,000 index point to close at 60,960.27 points, as against an opening value of 51,251.06 earlier in January, implying an increase of 8,717.21. That's about 18.96%. Meanwhile, on Monday, July the 3rd, Nigeria's equities market will continue its upward movement by 1.61%, the first trading day in the new month, as the market capitalization rose by 53 billion, closing at 33.71 trillion, representing a 1.43% increase compared to 33.19 trillion recorded in the previous trading section. So the stock market here today, after Monday's close, returned to 20.87%. That's how much the capital market or the stock market has performed since January up to date. So let's get talking now. We have guest Isaac Christian Anyalisi, is a stockbroker and investment analyst. Thank you for joining us. Good morning. Good to see you again.
Good morning, Frank.
Yeah, good morning to you. So talk to us about these figures. More than 5 trillion naira since the year began. That's 20%, more than 20%, even amidst macroeconomic instabilities and all other issues. Talk to us. How did the Nigerian stock market pull it through to getting this much?
Good morning, Frank, once again. Hello, can you hear me?
Yeah, good morning. Go ahead, sir. Good morning. Go ahead. I can hear you, sir.
Okay. What we are seeing in the Nigerian capital market is investors' response to policy reforms in the financial sector. You will agree with me that the removal of subsidy has increased confidence in the financial system. Similarly, too, the liberalization of forex, have also, increased confidence in the system. The banks will do higher volumes of transactions, which will also impact positively on their bottom line. And foreign investors over time will begin to move in funds. Apart from foreign investors moving in funds, you will also agree that there would have been domestic investors who have been very wary of the operating environment, who before now would not have shown a significant interest in the capital market. But with the policy reforms that we have seen, it is reasonable to expect that such investors will begin to move in funds into the capital market. By way of analytical extension, if you ask me, even the Bureau de Change over time, given the fact that the margin between the import and investment and export window for the trading in forex, given the fact that the margin has drastically reduced, or when you compare it with that of the parallel market or the black market, it is reasonable to expect that some of the investors or some of the players in the Bureau de Change might even have to begin to move funds into the capital market to take positions, because the policy reforms are very strong positive catalysts to the growth of the capital market. That is why we are seeing the numbers that we are seeing, like you rightly said, above 60,000 now, about 60,938 points on Friday, and coming yesterday, you see the All-Share Index going to 61,947.24.
That's right.
And against 1.61% gain, and of course 20.87 percent year-to-date gain, with market capitalization also going at 33.7 trillion. And also on a gain, day-to-day gain of 1.61%. So some of these policy initiatives of the government is strongly behind the developments that we are seeing in the capital market.
Okay. Just quickly, I mean, despite the uncertainty and other economic challenges which negatively impacted the market in the early part of the year, we still saw the market pull this, through. But let's look at the outlook for the second half of the year. So what is likely to shape the markets? What are going to be the major drivers for the second half of the year?
Yes, starting from where we find ourselves now, you see that portfolio managers are doing their window dressing in expectations of financial reports trickling to the market, where the market having gone through the first half of the year, and of course expectation of returns. We are going to still see a bullish run in the capital market, given the fact that the policy reforms that have come to be is in place, and there don't seem to be any indication of the federal government going away, shifting from this particular policy reforms. In fact, going forward, with the restrictions on domiciliary accounts having been removed, you expect that certain diaspora funds that will come into the country will be destined towards the capital market. And again, if by the time the Monetary Policy Committee meets again and they increase the inflation rate, okay, they increase the anchor borrowing rate, it is the monetary policy rate, it is reasonable to expect that foreign investors will come in, because Goldman Sachs have repeatedly advised that Nigerian government or the monetary authorities should increase the domestic interest rate in tandem with the devaluation of the currency. That particular position has been re-echoed by the Bank of America just a day or two ago, also calling for an upward review of the domestic interest rate. So when that happens, you see that you have a situation where more foreign investment will begin to trickle into the country, and most of them will find their destination into the capital market. Also, do not forget that we have information that by the end of this week, a lot of ships will be betting with petroleum products. We have also been notified, or we've been informed that most foreign refineries are now extending credit facilities to Nigerian importers of petrol. So that also means that by way of extension, that companies, the petroleum marketing companies, such as ethanol oil, such as MRS, corn oil, will become very, very attractive destinations for some form of capital injections from some of the oil players in the oil company from the foreign environment. So given this scenario, given these factors, we expect that the capital market will continue to be on the upward trajectory going forward.
So you are saying we should put our eyes on the oil sector, as it were. Perhaps that is going to be one of the major drivers of the market in the second half of the year, isn't it? Okay, so let's quickly wrap it up. Talk to us about today's market.
If you look at the sectoral analysis, from the banking sector gaining 6.78%, the insurance sector 1.84%.
Right.
You have the consumer index
right. The consumer index
at 0.52.
Right.
Yeah. You have all of them in the green. Oil and gas 1.50 as at yesterday, and industrial goods at about 0.04%. So if you look at it, all the sectors, all the sectoral analysis are in the green corridors.